All right, we begin this morning with the fallout from new tariffs unveiled by President Trump. Wall Street opens in fewer than 2 hours from now, 2.5 hours. And at this time, stock futures are pointing towards a major sell-off. Stocks in Asia closed down today, with Japan's Nikkei losing almost 3% of its value. Over in Europe, the FTSE, the DAX, and the CAC 40, they're also in negative territory at this moment. Now, yesterday in the Rose Garden, the president announced a 10% universal levy that kicks in for U.S. trade partners in just a matter of days. And in less than a week, reciprocal tariffs against nearly 100 nations will begin. And according to economists, all of this will mean much higher prices. But President Trump says this will be good in the long run.
This is one of the most important days, in my opinion, in American history. It's our declaration of economic independence. For years, hardworking American citizens were forced to sit on the sidelines as other nations got rich and powerful, much of it at our expense. But now it's our turn to prosper.
And as usual, we have team coverage for you on this morning. You've got Ramy Inocencio in London following the response really from around the world. But let's begin with Natalie Brand joining us from the White House. Natalie, good morning. Walk us through how this new Trump tariffs plan will work.
Good morning, Errol. Yeah, the president and the White House says the way this will work is the U.S. is going to treat other countries how they treat us. Again, that's according to the administration. So in addition to that 10% baseline tariff on almost all trading partners, the White House, the president also announced these new reciprocal tariffs on around 90 countries. They unveiled a long list, which hopefully we can show on the screen. But basically, the White House saying how they calculated this is they're charging about half, roughly half of what these other countries impose on the United States in terms of imposing duties on U.S. goods. But if you also look at the numbers, the highest rates reflect the countries with the largest trade deficits with the United States. That's why China is being hit with a 34% tariff. That's on top of the 20% tariff that's already has been imposed. So you're looking at least 54% there. Also, the EU hit with a 20% tariff. Vietnam, 46%. Again, these are some of the countries in the top 5 when you look at government data regarding trade deficits. But then other allies also impacted. Japan, for instance, 24%. Now, there are some important exemptions to note. Sectors that are already subject to other tariffs, such as the auto industry, steel and aluminum. Those are exempt from these new tariffs since they've already been hit with other tariffs. And also, Canada and Mexico, they remain under those migration, fentanyl-related tariffs that had been imposed earlier, with the exception there of goods that fall under or are compliant with the U.S.-Canada-Mexico trade agreement, Errol.
OK, so that's the field of play and the position from the White House. But what are trade experts saying about their expected impact of these tariffs long term?
Yeah, well, many economists have been sounding the alarm that these new tariffs are only going to increase prices to consumers, to everyday Americans, at a time when people are still dealing with inflation. They also worry about the impact on the broader economy. And, you know, again, the administration argues that this is to bolster manufacturing at home. They call this, a national security emergency, and designed really to beef up manufacturing of key products at home that we have to import currently. The president noting that, you know, most of all electronics have to be imported. So I asked a trade expert, professor at GW of International Affairs, Susan Aronson, what she says to that argument regarding manufacturing, trying to bring jobs back to the United States. Here's what she had to say.
There will always be firms that hopefully will invest in the United States because we are a country of innovators and hardworking people. So, but to say that that is a result of the protectionism, I don't think so. There are firms that want to get ahead of higher tariffs. There are firms that have long wanted to invest in the United States, but I fear that this strategy is not an incentive to create jobs in the United States, unless the United States is your only market. But what the United States is doing is pushing countries away from us